Hello, everyone, and welcome to the Wavy Tunnel Market Outlook for the week beginning the 10th of August. So, before we start, if you all just please take a second to read the disclaimer that the presentation is for educational purposes only, and past performance does not equal future results. You can read through the rest of that, and then we can go into the um, my thought process, which is supporting what Jody is doing, and she did a very, very good presentation this week, which I suggest you all go and listen to, um, with Daniel, and which I do not cover here, but Jody covers extensively in all of her work with finding trade setups, etc. So, without further ado, let's get into the weekly ideas and um, possible trade setups that might be setting up for us. Before we start, what's ahead of us this week? We know about the Middle East situation. Weekend's always a tricky period because it's 2 days where the markets are closed and potentially loads can happen. As we speak, I haven't seen anything across the news headlines to suggest that there's been any change in what we had on Friday. So the markets will kick off where they left off on Friday. And what's ahead of us this week? Um, Anything of significance? Let's have a look. We had non-farm payroll, which was a bit of a surprise on Friday. And then this week, this could be quite important, the 3 month and 6 month bill auction on Monday. You tend to find that there's very little news until midweek when all the bigger data starts coming out. And then there it is on Wednesday where we start getting the inflation data, which is going to obviously have an impact now, coupled with the um, jobs data that we had on Friday. So they're looking for signs to see what's going to happen at the next. There's no Fed meeting this month, but there will be one in September. The consensus view is now that the probability of the rates going higher is reducing with the number the figures that are coming out, and so this will now give us the next indication as to whether that is further supported or not, and then some confidence figures towards the latter half of the week. Earnings perspective, there's still bits and pieces coming through. Nothing that's probably going to shake the market too much. Berkshire Hathaway, because of sentimental reasons, people always keep an eye on that. And Cisco Systems, because they've had quite a dramatic uptick in the last 3-4 months. So that's from the perspective of news flow. Let's go into the charts and have a look at the currencies. I'll tell you for nothing now, I'm going to do a slight little deviation from what I've done before when it comes to futures. And I was looking through Ninja platform. I'm going to use TradingView this today. Um, and but for now, let's go through the currencies and let's have a look and see what has happened and what potentially could happen. So I look at these patterns and I look at the breakout that we had, and obviously that's your non-farm payroll data. There's obviously a lift in the currencies against the dollar because the dollar would have come off because um, the possibility of a rate hike was reduced. And let's go and have a look and see where that is. And you see it nearly hit our target for all intents and purposes. It hit the target of what we were looking for on that impulse there. There's your 1, 2, 3, 4, 5. Is this complete now? Are we going to come a little bit further down into the wave? Look at the consolidation area. That was people waiting for, and this is just an example of where patience has to be exacted in these markets, where you waiting for breakout trades, and you don't want to get chopped up in this noise because it's use the tool that Jody was talking to you about early in the week with the scanner, and that will help you and save you time. So this has got to do one of two things now. So we might come back in to test this area down here at 115, the fill the gap trade, or we could blow out here and get an extended move. I think markets will be bracing themselves to see how we start on Monday with, let's go to a slightly higher time frame. And what I would do with this one is I would extend, if I could just grab that and extend that, because you see this is all one move and the way I measure it, so I've got to go to that top there, which is correct, and you can see that the target here on the 4 hour is slightly higher, and you can see that we've got a pullback range here which is supportive of when you get that sharp move. Remember I said the retracements are usually lower, so you've got fill the gap. This is a 4 hour trade. We are still trending higher. That's still a target. This is still an area of support. You can see all of these coming in. So as markets could go both ways, there's an area we need to watch, and this area up here. So if you're a buyer of dips, and if we roll over and we get a correction, and I would be looking into this area down here, 14, 14 and a half for continuation up to 16, 16 and a quarter. This was strong, ended the week slightly weaker, but yeah, need to see. The market wants to sell dollars, the market wants to buy equities, so we all have our biases as well, which we look for. So just set up your chart. You've got a framework here to you can see here where sterling is a good example of where you can see the euro has broken out and you can see sterling hasn't. So that comes into play in the cross play, because what we're looking at here, as you can see, is this is what we're looking at. So for this, we are looking at a move lower, and this is corrective, and this is on the 4 hour chart. So while we remain below this level here in sterling, the bias is still lower. But obviously, as we said Friday, we had non-farm payroll, there it is, and then the market went into indecision, obviously ahead of Friday, people not wanting to scale up into any significant positions ahead of the weekend and 2 days where the markets are closed. So we've got decisions to make on Monday as to where. You can see that if we pull back into this 134.20 area, likely to support what we got waiting for us there, the tunnels, the higher time frame, and so that's the daily, that's the 4 hourly. That could support this particular area here. So if I look at this move here, so you will see this on the hourly. So this is the 4 hour, and that one's targeting 132. Now I'm going to on the hourly, we're going to be looking at this move here, because I can see here that this potentially could challenge the top, but as long as we don't break the top, there's a potential for a trade there. And let's have a look at it, and let's just bring that in a little bit. I'm going to make that slightly bigger. Now we've got our levels with our fib. I want to take that off because I don't want that to cloud what we're doing. We've got our box drawn up here, and what I would be doing here is I would be drawing a fib from that point there, and extending it to that point there, and we can see that our target for this on the 4 hour, on this corrective wave, on the hourly, this is the breakout one. So, and you can see that we might have completed, so this becomes a target for potential sells, and it's not a bad trade because your stop is above the high, and we've got a box here, and I'm going to show you something when we get into the futures, and I'll show you on the currencies as well, um, with option levels and the role that they are playing increasingly, um, as a catalyst to what is happening in the markets. So that's for sterling. Let's go and have a look at the yen, because that's always interesting from an um, that's the daily, and you could see the massive intervention. It obviously found a flaw in that intervention cycle, and we got a level. Now remember, we've always talked about 160, and there it is. So there's your immediate range, 156, 160. And now you've got to work out what's going to happen. Obviously, we go take our swing high, swing low. We want some retracement values. What do we always say? The sharper the move down, the less likely it is to break above 38.2. So there was opportunities there. What was there? You could see that this was an area of resistance. Why do I say that? Because I just look at price action. And Jodie's got the price action course in her system as well. So go and read that. And that's price action in play. So this could be the first impulse of, so now as long as we stay below there, this corrective pattern could, as we've seen previously, could drag on for weeks or months. And then we should be eventually targeting 153. The problem here again is that we might have a weaker dollar or a stronger dollar. So if we have a weaker dollar, then this could start gaining some momentum. So keep an eye on that area there. Keep an area on what is that 160 line that we drew before. What does that coincide with? 61.8 and the tunnel, and fill the gap. Are you starting to put all the little pieces together now, and how this works, and frame out your charts? I will expand on this a little bit later, like I said, with options. Because Jodie's Canadian, let's have a look at the Canadian dollar, and you could see that strong move post non-farm payroll. So what have we got here? Bang, we can see that. I can see that we had this first impulse lower, no divergence. I would be looking for one more lower. And how do I measure that, and how am I going to get a target? I'm going to measure this move here. For all intents and purposes, we hit our target, so I'd be looking for a measured move and something a little bit lower on here. Any retracement into 139, 139.90, 140, selling opportunity for a possible move down into the 138s. So those were the currencies. And then what I said to you earlier was I usually use Ninja for this, but I was looking at my charts, and obviously because I've got the Wavy Tunnel set up on TradingView, and I can have the MetaQ option levels on here. So I wanted to just, the example that I wanted to show you was how you can see that Fibonacci, the areas of support and resistance that we identify from a price action perspective, the Wavy Tunnel setup, the option levels, and how this all ties into one succinct little package. Now we had a bigger move on this, and that's why my I'm just looking at my Fibonacci. So let's do this from the beginning. So I'm going to remove drawings. Right, so now if I had I've got a 4-hour chart, which is a very broad-based view, and we can see that we had a move from there. That was our breakout one. And why have I done not these fibs just to cover the ground that we've done before. And when I reference the awesome oscillator, as you know, you've got your first move, you've got a retracement value, you've got targets, and so on, and you do this for each impulse until your trend line is broken. Until your trend line is broken. There's your break of trend. Then you fib the whole move, so that becomes 1. So now on our count, that is 1. Now we're currently in a 1, 2, 3 correction. Now we want to observe and see, because we can expand that now, and we can expand this. This is my color coding systems, and this is why I'm always more comfortable with TradingView, because I've set it up properly. And I can now look at this one here for the correction, and that's my 4-hour intermediate. So it just gives me, yes, it's messy, but you'll get the point here. Now look at this. So this is the pivot point, 3100. 3100. So where's our target sitting? Up here. 3860. Where's our high? So there's a first area, there's another area of interest that I'm looking at, because I want to, this is a low risk trade. What I mean by that, it's because it's the high and my target of this correction here, which gives me a low risk trade, because if we don't break that high, then we are coming down to 26,186 or there or thereabouts. That's what I mean. So great. And obviously there's a lot of what we could do here is let's take out some of the GEX levels, because that just clouds I just want a slightly easier picture to look at, and then it'll just reduce some of these lines, and you can see what we are then looking for. You've got your bungees that are working, you've got your awesome oscillator that's working, you can see core resistance here. Where did we stop on Friday? There we stopped bang in there. And so this is the gamma wall. You've got your 1-day max move. So we understood why. What else have we got up here? The 707 retracement value, which we love. So this all at the moment is setting up for an interesting week ahead. So we've got this level here. So the other thing I would be doing here is I would be looking at price range, because I'm looking at this here. So I'm looking at this here, and then I'm going to clone that, and I'm going to do this, and I'm going to clone one more, and I'm going to do that. Why have I done that? The reason I've done that is because of this move here, this what I call the cup and saucer. So if we do not break above 30,086, there's a possibility we come down here, 28,779. What's waiting for us there? High volume level from an options perspective. What else is waiting for us? You know, a retracement value of between 38 and 50% of that impulse higher. Great. And then we have, if we break above there, what are we targeting? 3734. What have we got waiting for us there? A target at 3860. Another box that we've looked at, which coincides with the previous high at 30. So now you've set up your chart, and now you are just waiting for price action to unfold. You can go through then your lower time frames. You can go and see how that then sort of, you know, slots into everything that you are watching. All your drawings stay on there. So now you go into your hourly. You can see if there's any other areas of interest. What have we got here? Previous high, previous support. What have we got here? A measured move of that. We've got a high. You see how all these things now start coinciding. And it doesn't matter. And all these things stay on your chart. As you go through, and then it's there. So you can't see these now because they're onto a 15-minute chart. But let's just make it a little bit smaller. Let's just make it a little bit smaller. And then you can see that area there. So from a seller's perspective, you're watching that level there. Let's just check what time frame are we on. 15 minutes. I use a color coding system, so I know when I see a line, I know what time frame that represents. And that just makes life simple for me, and it's something that I've always done. And so I can just now on the 15-minute chart, so now I've narrowed it down. You know, the range is slightly lower, and I can keep going down in time frames. But my chart is completely mapped out now because I've started on the higher time frames, and I can see all the levels that are mapped out, and so we go. So I hope that helps, and that shows you what potentially could happen in the Nasdaq. So let's just go back to the 4-hour. Let's just go and fix that. This is why I'm comfortable with TradingView, because I play with it all the time. So let's go into the S&P, and the same things are going to happen now with, let's just make sure that that's correct. They're updating all the levels. Similar kinds of pattern. Look at these explosive moves. What have we got here? So this would have been our first impulse in the S&P. There it is. This is a 4-hour chart. We got a 4-hour. Where was our target? Look where our target was, 77,763. So this was ahead of time. So with the wavy tunnel system, you get your breakout one trade. From there, you got your retracement values. You've got your wave and your tunnel that are supporting you. The levels that I always love in here. So this hasn't happened. These levels might have changed ever so slightly. This wouldn't have changed the fib level, and this is what we love here. 707, I talk about it every single week. It's just something I've found over doing this for 40 years. And so, and then there was our target. Obviously, yes, there's a lot more going on, but this is a 4-hour chart. But there's your first move. You were waiting for that move there. That was your target. You could be trading options because you've got all of these factors in here. Have we broken the trend line? Where is the trend line on this particular 4-hour chart? Well, that's our impulse one. We haven't broken a higher high until there. So now that low there has made a new high. So connect that one there to that one there. So that's my trend line. So I'm not moving my fib. This is still the fib in play. If we went to a lower time frame, we would pick this up on an hourly, because that would have broken that trend there, and then we would be fibbing this particular move here. But on the 4-hour chart, what have we got? So we've got into this area where we've set it as a target. It could extend, and there's your measured move, which means it's 100% of the first impulse higher, that one there, and that's what measured move means. For those, a lot of people will know, so I'm not trying to be, you know, it's just what, for those people that are watching this for the first time. Here's got our cup and saucer type of pattern again, so we want to have a look at that. We want to just then, again, we want to measure what that potential move can give us in perspective of another target. So we are taking that low there, And again, you see how it coincides with the other moves. And whoops, I don't want to do that. I want to copy that and paste that. And then I want to pull that out and I want to extend that to there. And that gives us another level on our, if we break. Let's go and have a look at that in the hourly. Just make it a little bit tidier and see our levels a little bit more clearly. So we can see all of our measured moves. What does that coincide with? Breakout. Broke out, came back to support, previous area of resistance, now support. What we got there? We got tunnel waiting for us as well. What have we got up here? So you can see this is just waiting anticipation of non-farm payroll. There the breakout comes. Market's a little bit messy. What does this tell me? That means that there seems to be a lot more interest in the Nasdaq and the rotational in and out of AI. And the ES is just sort of doing its thing, grinding higher. So there you've got all your levels on here now. You've got all your option levels. You see how that coincides with everything that's been happening over the week. You can see now we need to break this level here, but we've planned for it. We've got everything mapped out on the chart. We're looking at all our levels, and so nothing for us to do until it gets into an area where we've got to make a choice. And then you'd be going down into your 5 minutes, 1 minute, 2 minute, whatever your preferred trading time frame is, and then you'd have done all the work on the higher time frames, and then off you go. So the other ones we look at on here is usually the oil price. So let's put the oil on now so we can have a look at that and how that's setting up. And again, you can see before I put a box in, so if I put a box in again, and I'm just going to go to the left hand side of the chart, and I'm going to just look for an area and pull it across. So what did this area here on the left hand side tell me about everything else? Look at that. And then what's this now? So obviously the option activity. What's our impulse? This is our impulse. Swing low, swing high. Oh, hello, 7.707. You can't make this stuff up. Here's the target, 100. So now you've got there, the previous area, core resistance. This is not by coincidence. This is how the market has set itself up. This is where market is dominated by option activity. Dominated. Leverage, everything. This is why a lot of these traditional things are not working anymore, because there's been a shift in trading style and tactics. So I'm not going to belabor the point. I'm just going to go to the gold. Let's have a look at gold. That's broke out because obviously the dollar's a little bit weaker. There might be some sensitivity to lower interest rates. People are not selling their gold now to go and buy some treasuries at higher yield. Maybe now they're selling, it's the other way around, buying treasuries because of the higher yield, and then so they will be buying gold. There's all your levels from an option perspective. Here again, this would have hit target. There it is, because there's nothing for me to do other than, so this might be a measured move into this core resistance, and we know what that means. That first impulse there might extend into this 4500 area. You see how this was breaking. Go and have a look at the 1 hour. So let's have a look at that. There was the break. There was the low. Here's your measured move. Let's put that in there. Let's make a couple of those. for our, whoa, don't want that. Want that one to put on top of there, and I want that one to put below there. Another example, if we broke below that, we would have come back into the tunnel, and what else? Previous area of support. I can't emphasize this all enough. Frame up your charts. Use the wavy tunnel overlay to see where your breakouts are, where your minor 1, 2, 3 patterns are, where your breakout ones are, where your retracement levels come to. What's your awesome oscillator telling you for divergence? What's it telling you? Divergent, made higher highs, no momentum, and hence we stuttered and stalled. Again, Friday, let's see what happens Monday. I think I've gone on for long enough today. I hope that was all helpful to you all. Good luck for your trading week, and I will see you all next week. Take care. Bye-bye.